Right, so once again, D at the top, price should go down. How far? Down to there. Now, one trade you can take is this trade here. So you would say, okay, well, I'm looking here. Look, this is where the price is now. I think the price should go down to the median. We've got an 80% chance of that happening. Okay, and my stop loss can go just above the D, because in theory, the price shouldn't really go above the D. So that gives me a 1 to 7.39% return on my money. So if I want to risk 1% of my trade in that bit, in case it goes wrong, that's what we call the stop loss. I'll just put a line on here. Oops. So that would be my stop loss just above the D. Okay, and my target is going to be the median. And by the time the price gets to the median, it might happen over here. But I always go roughly from where the price is. I always go, you know, I'm a little bit over, but that doesn't matter. It's close enough. I'm just not doing it over here, right? So what I'm looking at now is if I want to work this out, I go to my FX book. If you click home, it's got Forex Calculators. Let's open that in a new tab. And you want position size calculator. So if your account is in, say, pounds, okay, I tend to trade in dollars, and your account size is, say, you know, it doesn't matter. I'll do a couple of examples. I'll do, supposing you've got $5,000 account, £5,000 account, right? £5,000, and you want to risk 1% in that red zone, that little bit. What I need to know is how many pips is that. So I'll come over here, and I'm gonna. It tells me up here it's 10.5 pips. See, it says 10.5. Okay, you can measure it as well if you're not sure. There you go, look. So it's a 10 or 11, isn't it? Right. So I'll put 11 pips stop loss. You leave the contract size unless you're Barclays Bank or somebody like that. You leave that, right? You don't need to alter that one. And the currency pair is GBP USD. GBP USD. I always click calculate, even though you saw it pop up. So what this tells me is if I lose that trade on my £5,000 account, I'm going to lose £50. Okay, but that's 1%. So I'm not going to cry if I lose 1% of my account, am I? No matter how big or small my account is, I shouldn't really be that fussed about losing 1%. I don't deliberately go and lose trades, but I shouldn't be too upset about losing 1%. And this is proper risk management, guys. This is what we mean by proper risk management. Now, if I win the trade and it goes all the way down there, I've made a 7.3% return on my money. But what I like about this is I could lose 7 trades. If I trade like this, if I lose 6 and win 1, I'll actually still be in a little bit of profit. So even if I'm not a good trader, I can still grow my account or at least break even. And I'll tell you what, guys, there are hundreds of thousands of retail traders, people that trade from home, that would love to at least break even. Okay, so we've got something really special here. And of course, normally this is very profitable. Now, the other thing I'll point out, of course, is you don't have to wait for it to go all the way down there. Okay, because along the way, it's not just going to come straight down, is it? Very rare does that happen. It will go up, down, up, down, up, down. Okay, so if you're looking at your chart and you see it gets to there, well, that's still a 1 to 3.4% return on your money. 3% return on your money, not bad at all. So that's my iPad talking to me. So there's one trade that you could do.